Hello and welcome back to the course. In the film Wall Street, Gordon Gekko famously stated that greed is good. However, in practical terms, greed can cause major issues with your trading. From a psychological standpoint, greed is one of the most dangerous things that a trader must deal with. It is quite easy to fantasize about the millions of dollars that you're going to be making trading, but how much money on a particular trade you're going to have to be involved in as well can be a fantasy. However, this is one of the most dangerous pitfalls that you will run into during your career. Unfortunately, it's very common and a leading factor to wiping out retail accounts. Quite often, traders will look at a position that is working in their favor and convince themselves that the market is going to make them rich overnight. And one recent example is in front of you. This is the Bitcoin US dollar weekly chart on the Finex exchange. And here you can see this weekly chart during 2017 was completely out of control. I mean, we went from $1,000 to $20,000 or just below it. In less than a year. That's a 20-time return. That's ridiculous. Unfortunately, most people did not think about this, and they jumped in. I mean, when you look at this and you have no dog in this hunt, as it were, if you just look at this chart like this, what part of this chart tells you should be buying at this point? But unfortunately, a lot of people did. Coinbase had 300,000 new accounts every weekend open up right around this candle. And you can see what it's done since then. This, for reference, was when the futures market started to open up. So when you step aside from this market, it's easy to see that here at 15,000 on the way up, it wasn't a smart buy. For those who got in closer to 20,000, you're already down 50%. Now, that doesn't mean it can't come back, but that's a lot of pain to go through in the short term, even if it goes in your favor. Realistically, markets like this tend to crash just as hard as they go up. So I suspect we could go lower, but that's neither here nor there because most of you are going to be trading forex. And forex would be leveraged. And I can tell you right now that if you're in a leveraged position, say in the euro or the Japanese yen or something, and it goes this far against you, 50% of the actual underlying price, you have just been stopped out and your account's blown up. So really, this mistake was easily avoidable. All you had to do was ask, how much further can this go, at least in the short term? Is it overbought? A simple glance at this chart when it's this high should tell you that. Yet there are plenty of people willing to jump in trying to get rich overnight. And that get rich overnight mentality is one of the biggest probably damaging things for a trading account. So simply becoming greedy and not thinking your way through a position, it's one of the greatest ways to lose money in these markets.